ONGC says that the recent hike in the subsidy burden has put profitability under pressure, but it will not have any effect on the company's capital expenditure plans. In a conversation with ET Now's Ritu Singh, its chairman and managing director Sudhir Vasudeva says that the Kirit Parikh report on oil prices has fallen short of ONGC's expectations and that the oil major will continue to seek remunerative prices from the government to make its operations sustainable.
I can tell in the interim, yes, that this is certainly a big burden on us. As compared to the last quarter, which was 12,622 crores, this time it is 13,796 crores. It is about 10% higher than that. So we are naturally worried, and we have been telling everyone that unless until we get remunerative prices, it is going to be very, very difficult. And from that viewpoint, even the Kirit Parikh committee report which has come is sort of short of our expectations. All the while we were asking for more than $60. But in this case, what Kirit Parikh committee has recommended is from next year onwards, $60 at a price of $120. So which is again lesser than what we expected, but it is certainly better than what we are getting today. So we will keep on trying and pleading with the government, both our administrative ministry as well as the finance ministry, that we need remunerative prices.
It hasn't happened in the past, but is it possible that ONGC might see a loss in the crude oil business because of this?
It's very difficult to say. Only thing is, like last time, last quarter, our net realization was $40.17 and our cost of operations is about $40.0. So the margins were very, very thin. And this time the numbers are still being worked out, but we have gas business, we have value-added products business, so all put together we should not be going into reds, but it's always a matter of concern. Because what is very, very important and which needs to be appreciated is that 47% of this thing revenue only comes from ONGC, but 87% of the profit comes from ONGC only in the group. Our total turnover is something like 1,60,000 crores and the total profit is about 24,000 crores last year. 80,000 crores or something is the turnover of ONGC, and 21,000 crores profit comes only from ONGC. So ONGC is a bread earner for the entire family. Whatever expansion plans we have for OVL, for MRPL, they have to be either funded by ONGC or they have to be at least supported. Corporate guarantee has to be given by ONGC to the subsidiaries. So from that viewpoint, we are worried.
So what is your outlook on realizations, and is there any change in capital expenditure plans that we can see?
No, capital expenditure plan, we recently had a review taken by our Honorable Finance Minister, and we have indicated that our plans for this year is about 35,500 crores and we are very much on track.
You have been scouting for acquisitions. What are the new geographies you're exploring?
We are exploring the entire world. Last year has been very good for us. We got this Mozambique 2 deals, then Brazil where we preempted Sinochem, and also Azerbaijan. So 3 success, and we have a few more irons in the fire, but only thing is we don't want to spoil the party by telling something prematurely.
But the recent acquisitions made even through OVL, how have they added to your profitability and production?
They certainly will add because Azerbaijan is a producing property, so that is adding about 0.9 million ton immediately. Others like Mozambique, etc., are likely to come on production by 2018. Brazil again is going to be on production because that Brazilian BC10 phase 1 is already on production, and these are for the later phases, so they also will be they'll be coming on production soon. So all this thing will definitely add, other than Mozambique, which is slightly medium.